Over the last couple of years, despite the pandemic, despite the mortgage forbearance, the eviction moratorium, inflation, war, the supply chain interruptions, I've still been very bullish on the housing market, suggesting that if you're waiting for a crash, you're going to be waiting for a very long time. Yet, I always add the disclaimer that there is one thing that can bring the housing party to an end, and it's finally arrived, and it's starting to take its toll. I'm going to tell you what it is, its current impact, and what you can do about it. You ready? Let's go. Hi, I'm Matt Theriault, CEO of Epic Real Estate, where we show people how to invest in real estate so they can escape the daily grind and retire early. All right, so let's cut to the chase. The only thing that can stop this housing market from its skyrocketing appreciation is monetary policy and/or the interest rates. And right now, they're both in full effect, applying pressure to the market. Money printing is tightening, mortgage rates are rapidly rising, and together, they're cooling off the housing market significantly. For the third straight month, in fact, bringing the market to its weakest pace in nearly 2 years. Last month's real estate sales fell 5.9% year over year, and this month's report shows a 2.4% slip of existing home sales from last month. And the most recent data is suggesting this slowdown is going to be extending into May, as mortgage applications in the week ending May 13th slid 12% from the prior week and 15% from a year earlier. And only 19% of consumers surveyed in April said it was a good time to buy a home. That's down from 47% a year earlier and a record low in data going back to mid-2010. And the market is seeing a lot of buyers bail the home buying process altogether. They're tired of shopping. They're tired of losing to multiple offers. They've been priced out of the market, and the rising interest rates are only making it worse. And it's the first-time home buyers that are getting hit the hardest, as the share of first-time home buyers in the market fell to 28% in April from 31% a year earlier. And this frenzied market that took off mid-2020, it's losing its steam. But is it crashing? Home sales are definitely down, and the number of homes for sale is unusually low for this time of year. But most homes are still receiving multiple offers and selling quickly. At the current sales pace, there was a 2.2-month supply of homes on the market at the end of April. Still, very much a seller's market. And although sales are down, home price growth is not. Prices rose 14.8% in April from a year earlier to $391,200, setting a new record going all the way back to 1999. So despite what you hear about the slowdown, historically speaking, the housing market is still very hot. The buyers who've been shopping for homes have lost out on multiple offers to buyers who offered to pay more or were willing to skip the home inspection or waive appraisals or remove their loan contingency, as so many buyers in the market, they were flush with cash, and they are still flush with cash. About 26% of April existing home sales were purchased in cash, and that number is actually up from 25% in the same month a year ago. Not to mention, the typical home sold in April was on the market for just 17 days, unchanged from the month prior. So with rates rising the way that they are, buyers dropping out of the market, how are housing prices still on the rise? Well, look no further than the basic economic law of supply and demand. The supply of existing homes for sale is scarce, and builders are losing confidence in building new ones. Builders, they've tried to ramp up their activity. They know there's a lot of demand out there, but they've been slowed by the supply chain challenges, rising supply costs, and labor shortages. A measure of U.S. home builder confidence fell in May to the lowest level since June 2020. So what does the future hold for new homes hitting the market? Well, the closest thing that we've got to a crystal ball is the residential permit numbers, as they can be a bellwether for future home construction. But they fell 3.2% last month. So supply, it's ultra low still. And demand, how could it still be so high? Very simply, many buyers are certainly getting priced out of the market, and you would expect that to reduce demand, but they're not all getting priced out of the market. For example, instead of a home receiving 10 offers, now they're receiving only 7. The fact is, we've got more people than we've got houses. We're not in a housing bubble, we're in a people bubble. So what are all of these people that are leaving the market doing? Where are they going? Wherever they can. And they may be hopping out of the frying pan into the fire, as rents in most places are rising faster than the home prices. Dallas rent prices seeing some of the highest increases in the United States. Denver's skyrocketing rental market is pricing people out of homes. Manhattan rental prices surge on pent-up demand. Study shows rent prices are increasing 4 times faster than income. Housing nightmare continues as rent soars. Rent prices keep climbing. No relief in sight. Rental prices continue to soar in April. Rent prices in college towns across the country are skyrocketing. Rents rising faster than Nashville home prices. And those headlines are all from just this past week. And to me, that would suggest in times of runaway inflation, real estate is one of the safest places you want your investment dollars. And the rising rents that you receive as a landlord will offset the rising prices at the pump and the grocery store. If you've got the means, you want to be in real estate. If you need some help with where to begin, I've got some free information for you. Download an investor's guide to passive income at cashflowsavvy.com. Now, I stand by my prediction. If you're waiting for the housing market to crash, you're going to be waiting for a while. The supply and demand fundamentals are too strong. But keep your eye on the Fed, the monetary policy, and the interest rates. It has had enough of an impact to slow sales activity, but not yet enough of an impact to push prices downward. So what did you find most impactful? Let me know below. And who else do you know that needs to see this? When their name comes to mind, please share it with them. Oh, and if you're already subscribed, I went ahead and I pulled out this video for you to watch next. Otherwise, I'll see you next time. Take care.